This is our Forex blog for Friday, October 19th, 2012. And this is our new currency meter, which is very similar to the old currency meter. However, the build your own trend has been redesigned to now allow for longer time frame trends, such as the daily, weekly, monthly. And this is giving a certain weight to different time frame trends. Most of them, 2/3 of this is very fast, real-time momentum. It measures the percentage of currencies the dollars going up or down against, and also the intensity of that up or down movement. And when the daily, weekly, monthly confirm, you're going to see levels at and above this 80 level. This is what the old one looked like, where the real-time trend was on the top, then we had the 15-minute trend, hourly, daily, weekly, and monthly. As you can see in the yen, most of the real-time trends are going up today. However, the weekly, monthly trend's down. Which time frame trend do you use? On days where all the time frames don't line up like they do in the dollar, traders would be confused. And so the new currency meter makes it a lot simpler. You can clearly see that the dollar is stronger than the yen. And for the most part, you want to be buying the dollar today against the weak currencies. One of the weakest ones is the CAD here. And so buying the dollar CAD makes a lot of sense. So let's bring that currency up. Okay, so on this chart, I have the build your own trend set weighting just the real-time trend, and I'm still using the longer time frame trends underneath it just to get a feel for how all the time frames work. And also, there's two methods that we use to trade. One is identify a trend. It was clear the dollar was strong, the CAD was weak. Here's the trades I would have taken. Once it gets to the upper containment band, you got to wait for a little bit decent pullback. Draw your trend lines over the bars high. This is a decent one. Typically, when currencies move outside these bands, they're going to pull back a little bit. You want to wait for, I found one mechanical way of spotting a high probability trade. Put on our moving average, but it's not a regular moving average. 5 period, shift to 2 bars to the right, and click the DSP, digital signal processing. Same advanced math that goes into cleaning up digital stereo signals. Usually when a currency's gone too far, you want to wait for at least 6 bars that are underneath this very fast moving average before you buy a pullback. So here you have that bar barely closes underneath. That's 1, 2, 3, 4, 5, 6. This would be the earliest you could get into the trend. The farther up it goes, the more likely you're going to want to wait for 8 to 12 bar pullbacks. So you can see 7, 8, 9, 10. Somewhere around this bar, when it starts to go back up, it's a pretty high probability trade. And you can always take all of them, because the ones that don't work, let's say you bought this pullback right here with your stop underneath the bars low. When it starts going up and you see it doesn't have the momentum it had before, you're going to quickly move your stop to break even. You're going to, or maybe even get out of this trade with 4 or 5 pip win versus a loss. And you can see our trading signals did a pretty good job. Found this buy here, this one here failed, this one failed, this one here led to a big win. These circle trades are counter trend trades, so anytime you're watching the strongest currency, you probably want to pass on doing the counter trend signals. But for the most part, they are very accurate. You can see which one was it? I think the pound yen today. We nailed the low very well on this down move. These 2 lows here were found with our counter trend signals, as well as this one here. So there's a lot of advanced math that goes into our counter trend signals, and we usually only find them at extremes, such as our 4-hour range projection stat low or stat high, or the 1-hour standard deviation range. How far the currency moves during a given hour is its average high or low, and we take 1 standard deviation above and below that, and some of these signals are based on that. Or if during the previous hour the stat low got hit and you have a 3 to 5 bar pullback underneath that, typically the market's exhausted and it's going to pull back, at least enough to get you out of a trade with break even, such as this buy signal right here. You're in it, the market starts to go up, you move your stop to break even pretty quick. And that's how it works. And so a lot of these counter trend trades are relatively low risk. I know a lot of traders only want to trade with the trend, but when the market moves statistically too far, there's a lot of nice 20 to 50 pip counter trend moves that you should catch, especially as you learn to spot, in this case, the pound yen, the weekly, monthly trends up. So while this might be moving down today, the weekly trend's still up pretty strong, the monthly trend's up, and so there's likely to be buyers at the lows. Now, if this one had a daily, weekly, monthly trend that was all down, you probably do not want to take those trades, or you'd wait for them to go way outside the lower bands before you'd even consider a counter trend. So that's where, learning how our tools work and just a tiny ounce of common sense comes into play. Trading is not hard, despite what most people might think, especially traders that have lost all of their money one or two or three or even more times. You just don't know how to trade right, and it's all about small losses, big wins, and using probabilities in your favor. Our software is all about statistics in terms of statistically which currencies are the strongest and weakest, and how much intensity is going on with the up moves or down moves, how far has some currency normally moved during each period of the day. That's the average over the past. Is it moving more or less today? If it's moving considerably more at an extreme, we let you know, and that's what these counter trend trades are made off of. You can see two counter trend trades here earlier that also worked. Every single one of the counter trend trades worked. Even this one was enough to get you into pretty much near break-even trade. And they're also good for early warning systems. The ones I consider very low probability, I decided to put on the chart anyway and just label them as a gray color, which you can set to black if you don't want to see them. Put them on black on a black background, you won't even see them. But if you do take a counter trend buy like this one nailed, and it goes up, and you see a counter trend trade here and a trend. This is a consolidation rectangle breakout pattern, as was this. The blue ones are pretty highly profitable when they work. They're not the highest probability of all of our systems, but any trade that over a few dozen trades finds more pips than in the wins than losses in the ones that don't work, I'm going to put into the system, because that's the key to trading. You take every trade, you manage it properly based on the real-time momentum. If you take a short right here and it gets super, super weak and then the weakness falls off, you might want to get every trade, whether it's only 10 pips. Sometimes you only make 3 or 4 pips. And always use fib targets as well. Here's the first swing down, right? So if you had gone short right here, this fib target, you would draw that on there, and this is a very high probability place to get out of your trade. So if you get a counter trend buy signal right at a fib target or any other kind of, you can see the dark gray background on here. These are fib targets I do each night. I spend 30 or 40 minutes every night, so you don't have to. And anytime you get a buy signal right at one of my projected likely lows of the day, especially intraday, if a fib level is right in or near that level as well, it's very high probability. And again, the weekly, monthly trend are up, so this is likely to be pretty much near the max low. And it did try to go a little bit lower, maybe 6 or 7 pips, and that was the end of it. Go back to the currency meter and show one more. Now, this is the old currency meter, and I can see how new traders, and the reason I created the new one is because so many new traders told me that they couldn't make money with this. It was too confusing for them. Now, obviously, on some days when, let's say, the dollar is going up on all time frames, it's a no-brainer. I don't know how anyone could possibly screw that up, but that only happens maybe 2 days of the week. The rest of the week, you're going to have some trends going up, some trends going down. And which time frame trend do you trade with? Experienced traders have no problem judging the 3D dimensionality of the markets. Some time frames are going up, some time frames are going down. Real time can be going up, but the longer term trend can be going down. Real traders, professional traders, know all the different time frame trends, and our software makes it real easy to see that at a glance. But this might be too hard for new traders. So again, for new traders, the new one factors in everything into one reading. And you can see today the dollar is very strong. Let's look at some other ones that were strong. Let's scroll these back to make sure that we're on the real time. The euro got really strong at 8:30. Let's scroll this back so we can see what was going on at that time. The yen all of a sudden got weak, and we know that the yen was very weak yesterday. And because it had gone up for a couple hours with decent strength, it's reset for a nice move down. You can see the euro went down with a little bit of intensity, less and less. What a wonderful, in the exact opposite pattern happened on the yen. Around 8 o'clock here, the euro-yen is a good one to be looking for buys. So let's move this one up a little bit. 8:30, you're looking for buys. and just draw your trend lines over those bars high. You can see this one went up about 8 or 9 pips, enough to move your stop to break even. Worst case scenario, it pulled back again with even less weakness. You buy this breakout right here, and guess what? It went from 103.90. You would have actually got in a few pips underneath that, up to 104.13. So you made over 20 pips in that trade, and you probably made 5 or 6 or break even worst case scenario in the first trade. And that's how you use the currency meter. It's that simple. And not every trade is going to be a winner, but most trades are going to move some amount of pips your way, hopefully 5 or 6 pips, enough to move your stop in half. And therefore, instead of having a 6 or 8 or 9 pip loss, you have a 4 or 5 pip loss. If it goes a few more pips your way, you move your stop to break even. So those trades that don't work, worst case scenario, you have a break even trade.